It's Monday the 4th, I'm FX Plu and this is CurrencyTransfer.com's market update. So the main headlines today are that the employment report from the US all but confirms a US rate hike, the EU economic slowdown is to provide a long-term backdrop for the single currency, and sterling stages a short-term rally ahead of the Brexit proposals. So we'll start in the US today. Friday's sweepstakes saw me woefully off the mark yet again. My 180,000 new jobs was dwarfed by the headline figure when it surprised to the upside at 223,000 new jobs created in May. The April number was revised down, so the chances are that the May number will follow suit there, but there are no prizes for revised numbers, so that's a pound I'll never see again. The May wage growth also rose to 2.7%, and this is a leading indicator used by the FOMC when considering their interest rate policy. The market has now therefore priced in about an 80% chance of a rate hike when the FOMC meet next week, which should provide the dollar with ongoing support. The dollar index did rally, moved up to 94.45 on Friday. The overall direction for sterling, meanwhile, is lower ahead of the UK Brexit proposals that are due out over the next couple of weeks. But sterling staged a short-term rally at the end of the week, which continued into the Asian session this morning. Manufacturing data released on Friday showed improved activity in May, and cable reached a high of 133.60 on Friday, which was impressive given it was staged in the face of a dollar rally. We have continued in the Asian session and it's currently around 133.80. This move is, however, likely to be fairly short-lived, with a prospect of disappointment when the government finally provides Brussels with their proposals for the future relationship between the UK and the EU following Brexit. There have, of course, been further rumours circulating over the Irish border issue. This problem has all but defined the Brexit process. How can it be solved is the most important proposal that everyone is looking forward to, since it appears that no matter what the proposal, one side of the border, either Northern or Southern Ireland, is likely to be very disappointed. And meanwhile, the euro is facing a number of challenges. Growth continues slightly across the smaller member states, but it's beginning to falter in the main powerhouses. Germany, France, Belgium, Holland are all struggling to post continued growth at the moment. We saw a slight relief rally when the Italian coalition was allowed to form a government at the end of last week. However, remember that government in Italy is now going to be heavily Eurosceptic, and so therefore carries continued risk of further disruption to the markets. Euro dollar fell to 116.15 as the dollar advanced on Friday, but has moved slightly higher in the Asian session, touching 117. Any questions? Pop them in the comments below. We'll keep you posted throughout the week. See you again.